So once again, massive congratulations and welcome to our weekly trading call. My name is Michael Ajay, one of the top leaders here in Melius, and I'm excited to be hosting this week's call. Guys, we have a fantastic opportunity and amazing tools that we have that's really helping people to really benefit and capitalize in the largest financial market in the world, which is the foreign exchange and crypto. Now, guys, I really want to just set everybody's expectations when it comes to learning this skill. Many people, when it comes to learning a degree, will spend 3 years in a degree, pay a lot of money and not even use their degree. And that's 3 years. But when it comes to learning how to invest your money, people have this get rich quick or lottery mindset. But I want to really set your expectations that you are investing in yourself to learn a skill set that's literally going to change your life. You're going to get out what you put in. Guys, it's all about consistency, being consistent. It doesn't matter how busy you are. Even if you say to yourself that I can spend 30 minutes a day on this skill set, that 30 minutes, 5 days a week, over some months, even a year, will compound. The effects, the learning will all compound for you to gain a skill set that will change your life. So I literally want you to really set the right expectations, guys, that you're coming into this to go all in, to be consistent. You know what I'm saying? Be consistent in what you are doing. These tools are amazing. I Go Trade, Traders Gemini, the education. We've had individuals in our team, especially in Latin America, taking an account from $45 to $1,000. And he's just in his first month of joining this business. Now, results are not typical. And just because you come in the first month doesn't mean you're going to achieve the same. But we're just setting your expectations. We're just setting there what can happen. If you apply yourself, if you're dedicated and you apply the principles that you're going to learn today. It's so, so important that you understand that in trading is not about your technique, but it's about your psychology, your mental capacity to be disciplined. Many of the successful people, not just in trading, in business, when they ask, what is your key to success? What they say is discipline. That, guys, once again, I'm going to be introducing an individual who is an absolutely amazing individual. In fact, when I met him, I really understood what it means to grind, what it means to be consistent, and what it means to be disciplined. He's an individual that has a huge why. And when he came to this business, we were all excited because we knew we had an individual who was not only dedicated, but a huge asset to our UK business. He's going to be leading on in this call and going, teaching us through his training. So guys, get prepared as I pass it on to the one they call Mr. Walter Anger. Walter, over to you.
Thanks a lot for that introduction, Michael. I appreciate it. Guys, good evening. I'd like to welcome every single person that has plugged into tonight's call. I'd like to welcome every single one of you to the call. It's just a second. Let me just sort this out. Perfect. So I'd like to welcome every one of you into the call tonight. Can you hear me loud and clear? Guys, if you can hear me loud and clear before I move forward, just drop a number 1 so that I know that you can all hear me loud and clear. All right, so Musa can hear me. Can anyone else hear me loud and clear? So I can make adjustments if necessary. Perfect. So firstly, before I start, I'd like to welcome Chelsea. I can see Chelsea's on the call. I'd like to welcome Chelsea to the Limitless family. Massive welcome from the United States. It's great to have you, as part of the organization. So a huge welcome. And I really look forward to seeing you winning with us. And of course, you plugged it into the first ever trading that, since you joined the company, it really goes to show how serious you are, to really win and get as much results as you can from this platform. So Chelsea, I'd like to say a massive, massive welcome to you. And, guys, even Francisco as well. I'm not sure if Francisco's on the call right now from taking his account from $45 all the way up to around $980 from what I saw. Again, a massive congratulations to that, within 2 weeks. That's an incredible growth to do within the space of 2 weeks. So now moving forward from that, guys, let me just briefly introduce myself. So my name is Walter Anga. And, I'm not here to, so what I'm here to, I'm not here to really hype you guys. I'm not here to motivate you guys. I'm not here to get you guys all excited. Like, my goal right now is to deliver, very important information that's going to help every single one of you guys to get results within in your trading journey within your first few months in the industry. So that's the goal of this call. The goal of this call is to help you guys see some very fruitful results from your efforts over the next few months that you're all going to be involved in this industry. So a little bit of introduction about who I am, what I do. I've personally been involved within Forex for just over 2 years now, and I've been involved in network marketing for just around 5 years now. And just a little bit of background about how I got involved in the industry. So I first discovered network marketing at university. I discovered trading also at university. But my discovery into trading, I never came straight into FX. My discovery was first in stocks. I discovered trading through a gift a friend got for me, and they got me a book called The Intelligent Investor by Benjamin Graham. And when I actually read the book, it opened my world up to a world of financial markets. And I never knew about the world of financial markets prior to reading this book. I never knew about the world of stocks. The closest I got to understand how stocks work was watching, of course, Wolf of Wall Street. But this book really opened up my eyes to how much wealth can be generated from the stock markets and from the financial markets in general. So that actually led me to do a lot of research into stocks, into FX and how it works. And eventually, I came into FX, right? FX was attractive to me because it was very liquid. It was a very liquid market, very lucrative. There's a lot of money clearly to be made within FX, $5.3 trillion a day. So I decided, to get involved. I decided to, I said, I'm gonna do whatever it takes to master this skill set of trading and become the best possible trader that I can be. And of course, my journey in network marketing started just before my journey in trading. So the first company I became a part of was a company that basically sold, they basically sold services like gas and electricity, mobile phone services, little things like that, right? So my journey in network marketing was very it was based on services and also like healthcare products. Like, we had a weight loss product, we had a hair loss product, we had little things like that. Not hair loss, hair growth product. Like, why would everyone want to lose their hair? But we had a hair growth product. So, my journey in network marketing was very typical. I went to a hotel room, saw a presentation. I thought, it's amazing residual income. Sounds good to me. Free money. Hey, why not? So I decided to go out there and actually, put in a bit of work. And my second company was a Forex trading company. And when I got involved in my second company, for me, it made perfect sense because it was trading and networking combined. And for me, it was like two things that I loved in one platform. And that actually really secured my, in terms of my decision to actually be in this industry long term. Because one thing I love when it comes to trading is the ability to be able to grow your accounts consistently over a period of time. And also to just, is not just a mastery of growing accounts, but trading is also mastery of self, right? Because you have to there's a lot of self-discipline that actually comes into becoming a good trader. Self-discipline in terms of your mental habits, in terms of your behavioral habits, like the little things will make a massive difference in the results that you're going to get in trading. Now, when I started trading, I blew multiple accounts. I've lost way over like £10,000 in trading, because I've just put so much money into FX. But, it did get to a point, I believe it was like mid last year, where I was like, enough is enough. I don't want to keep losing money in FX. I want to start actually growing my accounts properly. So what I did was I looked into a few courses and I just really pushed myself to actually start applying a lot of the things that I've learned. Because one thing I've realized that leads a lot of people to failure is lack of application, right? Because people learn and learn and learn, but they don't apply 90% of what they learn. Like they learn everything that they need to know, but they don't apply it, right? They think they know and they go out there and they do it and they fail, but they're not applying what they're learning. But when I started applying all the things that I learned over the years, especially when it came to risk management, the results I started to get in trading began to change drastically. Right now I'm experiencing weekly equity growth on my trading accounts. And right now I'm on a growth plan to actually build my trading account to 6 figures, before the end of the year. And I'm on track to make that happen. So right now, what I want to show you guys is what I would like to call the golden, because if there's any golden formula or secret to be able to build your trading account, if there's any secret to make that happen, right, is risk management. Like anyone can learn you can learn the best strategy in the world, right? You can learn the best strategy that there is to know in the world, but it doesn't guarantee you're going to become an amazing trader. Like you and I, let's say, for example, I just picked someone random on the call. Let's say Anne, for example. I can say Anne. So let's say Anne, let's say, and I believe that's Antoinette, right? So let's say Antoinette and I, we decide we're going to trade using exactly the same trading strategy, right? But the thing is, myself and Antoinette, our accounts are not going to grow at equal pace. Our accounts are not going to grow in the same way, right? It's still possible that Antoinette is going to experience a negative equity growth whilst I experience a positive equity growth, even though we're using the same strategy, okay? So it just goes to show that mastering a strategy is not enough for you to gain success in trading, to being able to grow your trading account consistently, right? The most crucial and the most important thing to do is to master risk management. The moment you start taking risk management seriously, because every one of us know about risk management, right? I was taught about risk management from day one. Like, when I read the Intelligent Investor is all about risk management, right? But why did I not apply it? Because I know that if I'd applied risk management from day one, I would not have lost as much money as I did in FX, right? I would have made a lot more back, right? But why did I not apply it? Because I came into trading with a 9-to-5 mentality. I came into trading with a gambler's mentality. I wanted to get lucky. I wanted to make a lot of money in a short space of time. Like that was the mindset I came into this into Forex with, right? Obviously, that mindset is a lot different now, right? It's completely gone. But right now, what I'm telling you guys is to do this, right? If you do have that mindset right now that you're coming into trading to just make as much money as you can in a very short space of time, I really want you to get rid of that mindset from today, right? If you're coming into trading with the mindset of typical 9-to-5 mindset, right, where you believe that by spending hundreds and thousands of hours on trading and Forex and trading, you're going to eventually make some money back, I want you to get rid of it, because FX trading is not about exchanging time for money. No, right? It's about mastery of the skill itself and understanding certain fundamentals that's going to allow you to be able to grow your account. But so before I actually start this trading, what I want to do right now, I want to make sure I have the right people on this call paying attention. Who on this call right now is serious about really taking the trading to a whole new level? Who's really ready to start building a positive equity growth on their trading account month after month after month? If you are, I want you to drop some flames in the chat box so that I know that you're in the right place to actually learn this information. All right. Wow. Okay. So you're definitely in the right place. There's a lot of people that are ready to make this happen. That's amazing. That's incredible. So let's get started then. So now I understand some of you guys were on this training last week. So the first few slides is going to be like exactly the same information that I shared last week. However, do not be deterred. Do not switch off. Do not think that, oh, I've heard this before, so I don't need to hear it again. Like, listen, repetition is the mother of learning. The more you listen to an information, the more you hear the same thing over and over again, the more it's going to get pushed into your subconscious mind. Because the level of expertise, the level of skill that we want to develop trading to is where we're able to do things subconsciously. We're able to manage our risk subconsciously, right? We're able to do it without even thinking about it. Like that's the level that you want to get to. Where you're trading is at a point where little things like risk management, you just do it without thinking about it. But that's only going to come from repetition, from learning the same information over and over and over and over again until you are able to apply it. Until you're able to apply it every single time you press buy and sell on the MT4 terminal. Okay, so let's get started. Risk management 101. Now, the first thing to understand when we're talking about risk management is this, right? You need to understand there's a big difference, because some people, when you tell them about trading, how many of you guys, I just want to know, how many of you guys have had someone tell you that trading is like gambling? How many of you guys have actually had someone tell you trading and gambling are the same thing? If you have, like, just drop a tick. If you had someone that told you at some point in your life that trading and gambling are exactly the same thing, right? Because I've had people tell me that before. I've had people tell me that trading and gambling is the same. There's no difference. When you're trading, you're basically gambling. You're trying to get lucky. Like, that's nonsense, right? That's absolutely nonsense. And I really want to show you guys exactly what I mean by that, because when we're talking about trading, right, I want to compare it to gambling. Okay, I want to compare it to gambling. Okay, because there's such when you go to Vegas, for example, in Las Vegas, right? There's a lot of casinos, amazing, beautiful casinos. Like, who has been to Las Vegas? Beautiful place, right? A lot of amazing casinos in, like, literally every hotel is a casino. Like, they just want you to go, stay, and spend money, right? Now, when you look at the casinos, now there's two things that you need to distinguish from the casino. In that casino is a business, right? We call it a house, okay? And then within the house is the gambler. The gambler is the person that spends their money to go over to Vegas, to go over to a casino to gamble and start making money, to get lucky and make money. Okay, there's a big difference between a house and a gambler. What is the difference? This is the difference. The difference is the house always wins. No matter what happens, the house always wins, right? Because the house is a business at the end of the day. The goal is for them to make profits. The goal is for them every fiscal year, to have a positive return of investment, to have a cash flow that's going to allow them to keep on running year after year after year. The house is a business. So do you think the house can afford to gamble? No. The house, they know the numbers. They know how many players needs to be playing per table for them to be profitable. They know how many players are going to get lucky at least once every month, right? The house, they know the numbers, right? So they're not trying to lose money. They're not trying to get lucky. They know the numbers. For them, it's a business, and they put a business in place purely to make money. That's one of the reasons when you go to casinos, it looks nice. There's lights everywhere. It's a fun environment. There's music, like, it's fun, right? And the whole point of making it fun is to just incentivize people to spend more money, okay? Now, one thing you need to understand about the gambler, on the other hand, is the gambler will lose long term. Most gamblers will lose long term. Now, I know some people that call themselves professional gamblers, right? Which is fine. There's nothing wrong with that. I do know that, there are some people that do pursue gambling as a profession, right? But most gamblers, like 99% of gamblers, will lose money long term. Let's say someone walks into a casino today and let's say they take £1,000 and they're able to make £10,000 on their first day at the casino, right? They take 1,000 and somehow they got lucky, they make 10,000. They're excited. They're like, wow, I just won £10,000. Now, what they're going to do, they're going to go into the casino the next day and they're going to try to get lucky again. They're going to say, I can make 10,000 for 1,000. I wonder how much I can make if I invest 9,000 or even 10,000, right? Maybe I can make 100,000. So maybe they might not invest the 10,000 on the same day, but what's going to happen is they're going to go in the next day. Maybe they're going to put in 1,000 on the same table and they're going to lose it all. They're going to get wiped out. They're going to be like, that's okay. I have 9,000 left. So they're going to go back the next day. They're going to put in 1,000. They're going to get wiped out. And they're like, that's okay. All I need to do is one more win, and I'm going to make my money back. Okay. So they keep doing it over and over and over again. And eventually they go into their pocket to get more money and they realize it's all gone. They realize that, oh shit, I've run out of money. All that 10,000 is gone. I've just gambled it away. Right. Most gamblers will look long at the start of the week, with a massive over 100% ROI, right? If they've taken 1,000 to 10,000, right? And they've ended the week with negative equity with zero. They've gone right back to zero, right? They started at 1,000 and they've gone to zero. That's negative equity, right? They're worse than where they started off. So, most gamblers will lose long term because that's how the business is designed, right? The house, they know the numbers, the house manages its risk, and the house simply do not gamble. Now, when we're trading, right, we as traders, our goal is not to be a gambler. Our goal is to be the house. I really want you to understand this. The goal of every trader that wants to become a professional is to be the house, not to be the gambler. I'm going to show you guys exactly what it means to be the house, because if you want to be the house as a trader, you got to know your numbers. You got to know your numbers. You got to treat trading like a business, right? Every time I lose money in the financial markets, I call it the cost of doing business, right? If I lose a trade today, that's fine. It's simply the cost of doing business. Tomorrow, I'm going to win a trade and I'm going to make back 5 times what I lost today. That's business, right? You got to treat this like a business. You got to know your numbers. You got to know what you're risking. You got to know exactly what you're doing on a day-to-day basis in order to grow your accounts, okay? Now, over time, you will get there. But the first and the most important thing you need to master is risk management, okay? Now, what are we talking about when we're talking about risk management, right? Risk management, we're asking ourselves, what percentage of our trading accounts are we going to lose if the trade were to hit stop loss? That's number one question. One thing I'm sick and tired is people coming to me, messaging me saying, oh, Walter, I lost so much money today. And I'm like, did you not know that when you enter that trade, you were going to lose that money, right? Did you not know that when you enter that trade, if the trade went against you, you would lose £100, you would lose £50? I mean, if you didn't know that before you enter the trade, then you were simply gambling, right? That's one of the reasons why when you lose money and a huge percentage of your account is gone, you panic, you get sad, you get depressed, you get emotional, okay? Now, when you manage your risk, you know your numbers. When you know your numbers, it prepares you emotionally so that if your stop loss was to get hit, right, you actually have an expectation of what amount of your account you're going to be losing, right? You know exactly what you're going to lose, so you have that emotional expectation. So you're not going to be sad or disappointed, right? You need to understand the lot size we put on is what makes our risk defined. And I'm going to talk a little bit more about defining our risk. But when we talk about risk management and trading, this is exactly what we're talking about. Now, when it comes to defining our risk, there's 3 sides to it, okay? So in the middle of this triangle, this is the risk management triangle, okay? Middle of this triangle is your account balance. So whatever amount of money is in your trading account, that's what is in the middle of that triangle, right? On the top, we have your lot size. On the left, we have your stop loss. And on the right, we have your take profit. These are the 3 important things that you need to control for you to control how much money you lose and how much money you win in trading. You're going to be able to control these 3 things, okay? So now, for those of you just new to trading, you've probably yet to watch the videos on Million Snowden. That's fine. So I'm just going to quickly define what your take profit and stop loss is. So a take profit, all that simply is an order that closes your trade automatically when it reaches a certain level of profit. And your stop loss is an order that closes your trades automatically when it reaches a certain level of loss. So your TP and your SL, they're just there to control how much money you make and how much money you lose within the Forex markets. Why is this important? Because look, guys, price can move very, very fast. For a lot of you guys that have been trading for some time, you've probably seen this, that price can move very, very fast in a short space of time within Forex. So that's why we have a stop loss and we have a take profit. Because let's imagine we didn't have a stop loss and price was to go against us by over 100 pips within, let's say there was a massive news event, price went against us by over 100 pips within 10 minutes. And we're working, we don't have our eyes on a phone or an empty phone, we're working, and we open a mobile phone only to see that our trading balance is now at 0, okay? Like a lot of us, that's gonna make us have a very bad day, right? Or imagine we didn't have any take profit and the trade went in your favor by 100 pips, but because you didn't have a TP to automatically take you out of the market, the price reversed and then went against you by 100 pips. So now what you have is a situation where you could have made money, but because you didn't have your TP set to automatically take your profit, price went against you and now you're in a loss, okay? And I know this has happened to a lot of people within trading, within Forex, right? A lot of people. That's why it's important that you always set your take profit and you always set your stop loss, okay? Now, the next is your lot size, okay? When we're talking about lot size, we're talking about predefined contract sizes, okay? Now, let me just quickly explain what I mean by lot size. If you guys go to, let's say, the farmer's market, right? I like to use really old school examples because, I live here in Kent and when I get fruits, I usually get fruits every 2-3 days. So I go to the farmer's market, you get fresh fruits, right? And the way farmers usually sell the fruits, they sell it in bulk amounts, okay? So they will sell you, like when you go to the farmer's, to the store for apple, for example, the farmer's gonna have, let's say, like 5 apples in like one basket, okay? They're gonna have 5 apples in one basket and they're gonna say each basket is worth £3. So you could get each basket is worth £3. So what that means is if I want 2 baskets of apples, I'm paying £6 for 2 baskets of apples, but in each basket is 5 apples, meaning I've paid £6 for 10 apples. When we're talking about lots, we're simply talking about a bulk amount. Let's say you go to Costco. I'm sure some of you guys know what Costco is, especially if you're from the United States, right? You go to Costco. When you go to Costco, Costco tends to sell things in bulk sizes, right? If you go to Costco to buy water, they wouldn't sell you like a single unit of water that you get from the supermarket. In Costco, they'll sell you a bulk of water, like a pack of like 10 or 15 water in one, right? And you're buying that as one unit, right? And that's what we call a lot. Now, when we're trading Forex, when we're trading money, guys, you're not exchanging £1 or $1 for you're not exchanging £1, you're not exchanging $1, you're not exchanging £10. If you put £500 in your trading account, you're not trading £500, right? What we're exchanging is thousands of volume of currency pairs. But what the market has done is they've defined it in lot sizes, okay? Now, there's 3 different lot sizes that we trade when we're trading Forex. One is called a standard lot size. The second is called a mini lot size. And the third is called a micro lot size, okay? Now, standard lot size is the volume of the bulk amount is 100,000. So 100,000 of whatever contract is within that currency, okay? So 100,000 units is within that is within that currency. And then the decimal, so when we go on MetaTrader 4, a standard lot size is represented as 1.0 or anything greater than 1.0. So if we're looking at 1.0, we're looking at a standard lot size. 2.0, we're looking at a standard lot size. 3.0, we're looking at a standard lot size. Now, what is the value per pip? So for a standard lot size, the value per pip is $10. So for every movement that price moves on the market, it's moving by $10 if you're trading a standard lot size. It's crazy, right? The second predefined lot size is called your mini lot size. Your mini lot size represents a volume of 10,000 units within that currency, okay? And it begins at a decimal of 0.1. So anything between 0.1 and 0.9, you're trading a mini lot size. So it's 0.1, the value per pip is $1 per pip. So if you're trading 0.2, that's $2 per pip. 0.3, that's $3 per pip. 0.4, that's $4 per pip. And it goes on and on and on. And finally, we have the micro lot size. So when you're trading a micro lot size, you're trading at a volume of 1,000, right? 1,000 units within that currency. And that begins at a decimal of 0.01. And the value per pip for a micro lot is 10 cents per pip. Why is this important? Especially if you want to gain success in trading, because you want to make sure that you're putting your money, right, where you can eat. Okay. Now, I've seen people, they put £200 in the trading account, £200 in the trade or £200 in the trading account. They get an over leveraged account. So let's say the broker offers them a leverage of 1 to 1,000, and they enter with a standard lot size of 1.0. And all it's going to take on a £200 account is only going to take 20 pips, right, for your account, for all the money in your account to go, right, if the market were to go against you, okay? So you want to understand this because it makes sure that you're putting your money where you can actually eat, okay? And I'm going to explain exactly how you can use your lot size to calculate your risk management. And this is simple. So this is called the lot size formula, okay? Because let's say you're using iGoTrade, and I know I believe Paulina is doing a trade-in on iGoTrade after me, right? She's going to show you guys how to utilize iGoTrade. So let's say you're placing trades from iGoTrade or whatever platform or provider you're using, right? You got to learn to define your lot size, because no platform is going to tell you what lot size to use, because your lot size is dependent on what's in your account. And I don't know what's in your account. You could have £500 in your account, £5,000 in your account, £10,000 in your account. I don't know what's in your trading account, okay? So I cannot tell you what lot size that you can use. It is your responsibility as a trader to define your lot size. It's the most important part of trading, okay? Defining your lot size. Okay, so this is a formula, and this is a formula that I personally use in order to define my lot size. So it's a simple formula. It goes, your lot size equals to your account balance. You multiply that by your risk. So let's say you want to risk 2% of our account balance per trade. 2% is 0.02. So we multiply that by 0.02. We divide it by whatever the stop loss is. and we multiply that by 0.10. Now, guys, I just want to know right now, how many of you guys were paying attention in your maths class, right? If you did GCSEs or whatever you did, how many of you actually were paying attention in your maths class? If you were, just drop a number 1. If you were messing about at the back of the class, drop a number 2, okay? Because now I know this is like a little bit of maths, but trust me, I'm going to show you guys a very simple way, because one thing I love about Millius is they provide a simplified way where you can actually calculate your risk management without knowing the math. So I'm going to show you guys how to do that in a second, how to calculate your risk management using the iGoTrade application without you having to know the maths, okay? But this is the maths for those that love to know the maths, okay? So I'll give an example. Let's say you have £1,000 in your trading account, okay? You have £1,000 in your trading account, right? So you're going to take that £1,000, you're going to multiply it by your 2% risk, and that's going to give you 20. And let's say that the trade gives you a stop loss of 25 pips from entry. You're going to divide 20 by 25 pips, and that's going to give you 0.2, okay? So we take that number and we multiply and we divide it. Sorry, 1 second. Guys, can you guys hear me? My earphones just switched off. If you can still hear me, just like press number 1 if you can still hear me. Fantastic. Okay. So we take that number, so which is 0.2, and we multiply it by 1.0. No, we divide it by 1.0, and that's going to give us the lot size. I did a different number at the bottom. I don't know why, but just to show you an example, let's imagine the number was 0.8, right? We take 0.8, we don't divide, we multiply by 0.10, and that's going to give us the lot size of 0.08. But I'm going to show you guys how to use that, how to do exactly the same maths using the iGoTrade calculator. And the calculator is going to basically do the numbers for you, okay? But I'm going to show you guys an example of why it's important to manage your risk, okay? Now, it's important that every time you place a trade, you know exactly what percentage of your account you're willing to lose. And the number that I recommend for a lot of beginner traders is 2%. It's very important you only risk 2% of your account in any trade that you're getting into. So I'll give an example when I say 2%. Let's say you have a trading account of $250, okay? And you risk 2% of $250. That means per trade, you're only going to lose $5. Now, of course, give or take the different currency pairs, because the value per pip does vary by currency pairs, but this is the average. You're going to be losing $5 per trade. Now, it's going to take you 50 trades if you're losing $5 per trade for you to lose all your money. Now, for you to lose 50 trades in a row, like, you have to be a terrible trader. You have to be like you have to be gambling, right? For you to lose 50 trades in a row. Like, it is nearly impossible to lose 50 trades in a row. Even if you're trading based off flipping a coin. Like, try this on a demo account. Just flip a coin, heads or tail, pick one currency pair, just one currency pair, right? Except from the pound, because the pound right now is on steroids, it's just going up. Let's go for Euro USD. Now, flip a coin, heads or tail. Heads represents buy, tails represents sell. And whatever coin, whatever side is flipped, risking only 2% of your account, right? You just place a buy on sell, and to do this every day. Guaranteed, within 5 days, you're going to get at least one trade you're going to get at least one profitable trade, okay? So to lose 50 trades in a row, like, you have to be doing something wrong, okay? Now, let's say you have an account balance of $500 and you risk 2% of that, okay? That means you're only losing $10 per trade. That's 2% of your account if a trade goes wrong. Again, if you're risking 2% of your account, it's only going to take you 50 losing trades in a row for you to blow your account, okay? If you have $1,000 in your trading account, you're only risking 2%, right? And that means per trade, you're only losing $20, right? It's going to take you 50 trades to lose all your money, okay? Again, $2,000, you're risking 2%, right? You're only losing $40 per trade that goes wrong. That means you need 50 trades to lose $2,000 that actually goes wrong or goes against you. So do you guys actually now see what I mean when I say that at the end of the day, when we're talking about risk management, right? Knowing your numbers are super important, because now you know that if you're losing 2% and you only need to lose 50 trades in order to blow all the money in your accounts, the question is, how can I prevent myself from losing 50 trades in a row? And what is the answer to that question? Millius Node, right?
I go trade. Like, that's the answer to your question, right? You got to know what you're doing when it comes to trading. So another thing to understand as well is your risk to reward ratio, okay? So when we're talking about risk to reward ratio, what we're doing is we're defining our take profit and we're defining our stop loss, okay? So for example, let's say you're about to enter a trade and the trade has a stop loss of 10 pips and has a take profit of 50 pips from entry. That means you have a risk to reward ratio of 1 to 5. I'll give another example. Let's say you're about to take another trade and the trade shows you a stop loss of 30 pips and a take profit of 10 pips. Now you have a risk to reward ratio of 3 to 1. In the first example, you have a positive risk to reward ratio because for every $10 you lose, you're making $50. In the second example, you have a negative risk to reward ratio. Why? Because for every $30 you lose, you're only making $10. That's negative. So I want to ask you guys a question, right? In order to be successful in trading, is it better to trade using a positive or a negative risk to reward ratio? What do you guys think? If you think positive, put positive in the chat. If you guys think negative, put negative in the chat. For you to be able to consistently grow your trading account, is it advisable to have a positive or a negative risk to reward ratio? Positive, right? It's all about having a positive risk to reward ratio. Why? Because if I'm going to place a trade, right? Let's say I'm going to place a trade, right? And that trade, I only lost, let's say I have 500 pounds in my trading account, right? And I placed a trade and that trade lost me $5. Now I'm trading at a 1 to 3 risk to reward ratio. The next trade was a winning trade and that trade made me $15. Does that make sense? I'm talking about $250 balance, right? So you do 5 times 3, right? That's $15. You profited from the next trade. You've lost £5 on your $5 on your first trade. You've made $15 on your second trade. Guess what? Your account is now is in profit. So your first trade, your account was in drawdown, but your second trade, your account is back to break even and now in profit. So you've broken even and now you're in profit from one winning trade. Let's say you lose 2 trades in a row. So you lose 2 trades in a row at a 1 to 3 risk reward ratio on $250. So you've lost $5 per trade. That means you've lost $10 from losing 2 trades in a row. The third trade was a profitable trade. Your third trade, you've made $15. Guess what? Your account is in profit. You've made back what you've lost and you're $5 in profit. It's crazy, right? If you guys think about risk, like when I'm talking about risk, if you guys really have this mindset when you're approaching your trading platform every single day, you're not going to let one losing trade to worry you. You're not going to allow 2 losing trades to worry you. Why? Because you understand that you're managing your risk and you understand all you need is that 1 trade after 2 or 3 losing trades to get your account back to break even or even a profit. Okay? Now, this is what we call equity growth. And this is the most important part of trading. Now, a lot of people come into trading that come with a gambler's mindset. This is what typically happens. Let's say the start of trading in January, right? And in January, a lot of gamblers, they get something called beginner's luck, right? Beginner's luck is where, let's say you go to a casino for the first time in your life, and for whatever reason, the first game you play, you won. You made money, right? And beginner's luck is actually what leads people to become gamblers, to become addicted to gambling. Because you got lucky the first time, and you're like, oh, wow. Maybe if I keep doing this, I'm going to make more money, and you end up losing a lot of money. Now, trading, similar things happens to people, right? They come in, they place the first trade, and they make a lot of money. They're like, wow, I just doubled my account on my first trade. That's crazy. This is amazing, right? So they make 10% in the first month. But what they do is they don't manage their risk. They throw all of that out the window and they try to repeat the results they got in January. In February, what happens is this. In February, their account goes to 0, right? The account goes to 0 and it stays at 0, right? Because from 0, you can't go anywhere else. Now, as a trader, this is what you want to do. In January, let's say you grow your account by 1%, right? you're consistent, you're managing your risk. You had a bad losing streak in January, but you made a few winning trades that ended your month as a 1% growth, which is amazing. That's growth, right? Your second month, you were able to pick up the pace a little bit. You had a few losing trades, but you had some big winners that was able to build your account, grow your account by 5%. Amazing. In March, again, you had a few losing streaks, but this time you're a little bit more patient with your trades. Your risk management is becoming more on point. So you're not placing stupid trades anymore. So this time you were able to grow your account by 7% in March. What happens again? You're practicing, you're still learning. You're going through the Midas node. You're fine-tuning your strategy. You're making sure your risk management is on point. In April, you were able to grow your account this time by 10%. Right? So what's happened is this. Between January and April, right, you've grown your account. You've had a positive equity growth, right? You've grown your account from where you started in January, you're up in a positive. But let's say that you're just gambling, hoping to get lucky. By your second month, you've blown your account. Question is, where would you rather be? Would you rather be the trader that's able to grow their account consistently month after month after month? Or would you rather be a trader that blows your account and have to put money in their account the next month and then they lose it again and they just keep getting frustrated and frustrated and frustrated because their account isn't growing? Who would you rather be? I know a lot of you would rather be the trader. A lot of you would rather be the person that have that positive growth. But here's the thing. If you want to be that person, you need to prioritize risk management. There is no alternative. There is no alternative. Look at the big banks, Morgan Stanley, JP Morgan. These companies invest millions of pounds just into the risk management departments. They employ people and they pay these people loads of money. I have a good friend, she graduated from university recently. She now works for Bank of America in the United States, right? She works in the risk management department and her starting salary is $80,000 a year, right? She's getting paid to manage the company's risk. So understand, risk management is important. Big companies do it. Banks do it. The question is, why are you not doing it? Right? Why are you not doing it? Do you think you know better than the banks? Do you think you know better than a hedge fund? Right? Do you think you know better than Warren Buffett? So every one of us, we really need to really focus on the most important aspects of our success within this industry, within trading. So number one is education, right? Really understanding, learning how this works. But number two is risk management. You know, Warren Buffett, and I love this, you know, this is something I always tell the people all the time. Warren Buffett said it's like rule number one, never lose money. Rule number two, do not forget rule number one. When it comes to investing, these are two of the most important rules when it comes to investing. Rule number one, you never lose money. Rule number two, you do not forget rule number one. Because at the end of the day, guys, what are we here to do? We're here to make money. I want to know who's here to make money within Forex, who's here to make money within millions, who's here to actually generate generational wealth within millions. If you are, drop some flames. If you're here to make money and you're not here to lose money, right? Rule number one, never lose money. Rule number two, do not forget rule number one. So on that note, guys, I'm going to hand it back to our host, Mr. Michael J. Hello, Michael. Are you there?
Absolutely amazing. Thank you so much for that amazing training. So right now we're gonna jump straight in, and we're gonna literally see how we can apply this knowledge and really use the tools to really multiply our account. How can I use iGoTrade to really increase my account and start using on demo? Because that's what we literally want. From this call, We want everyone to literally open up a demo account, go through the FX Mastery course, iGo Trade course on the Melius node and start placing the trades. So without further ado, I'm going to invite another lady who's literally a boss lady in this game, all the way from the United States of America. In fact, when she joined this business, I was absolutely excited because I knew exactly what she was going to bring to the table. So without further ado, I'm going to welcome to finish up on this call, the one and only Miss Paulina. Paulina, over to you.
Awesome, awesome. Wow, thank you so much,